Thanks, Dave. We'll begin with a few questions from our shareholders before we open up the call. Our first question is from Gaurav, who asks, what are some of the AI advantages Palantir has that none of the other companies can compete with?
I'll take that one. Palantir is optimally positioned for AI because the value is going to accrete to the incumbents. It's going to accrete to the people who own the workflow, who own the software. So in our case, it's not just the customers that we do have today. It's our ability to acquire future customers. It's the 20 years of experience that we have solving the problems that matter. The problems that you should be solving with LLMs haven't changed. It's the same problems you should be solving before you had LLMs. And the 2 decades of experience we have and the knowledge of applying it means that we can solve those problems substantially more quickly. In other words, we've built the infrastructure you really need for LLMs to be valuable in your enterprise if you want to write profits and not poems with them. And I think one way you can think about this is LLMs and Excel. Like the LLMs are going to make Excel more valuable and useful. They're not going to replace Excel. The LLMs that we've been building with our customers in the field, in the last 10 weeks, I've been out there with our customers. We've deployed over 15 co-pilots. The time to value here is truly incredible. It's accelerating everything that we've been doing here. So I feel really good about the positioning there. And because we've been roughly 2 decades ahead, it's given us a lot of lead to think about the next ridgeline of technical problems, a lot of which I hope to share at AIPCon 2. But to preview one of them, it's really the K-LLM kernel. You know, I talked earlier in the remarks about how LLMs are statistics, not calculus. They're like these stochastic mad scientists. Why on earth would you ask a question of one LLM when you could ask K LLMs? And I think that really honors the fundamental reality that you need a committee here, that there isn't an answer to this sort of stochastic question. There are answers, especially when you don't have priors. And you can use this to actually wield these LLMs for decisive operational advantage in the enterprise when you have this sort of framework. So stay tuned, September, AIPCon 2, we'll talk more about this.
Thanks, Shyam. Our next question is from Patrick, who asks, how has the use of AI and LLMs benefited the sales cycle? Are you finding less resistance from internal IT departments? Has it brought more awareness to Palantir products and solutions?
Great. Thanks, Patrick. So as I mentioned, we launched AIP just 10 weeks ago. We're already seeing unprecedented interest, both from top-of-funnel new customers and from existing customers who are looking to expand with the AIP offering. You've heard examples of very real momentum and engagement and impact we're having with it from Jacobs Engineering, JD Powers, Novartis, among others, to name a few. And what we're seeing is with the emergence of LLMs, AI capabilities, operators and organizations are looking at ways to deploy those within their organizations effectively against their missions and do so safely and securely. And we are that solution. We have the product to do that. And we have 20 years of experience deploying our products in the enterprise and being able to do that safely and securely. So while sometimes in the past we may have had misalignment with ID departments, now we're fully aligned with what they're trying to achieve. So in short, we're seeing sales cycles shorten. We're expecting that to continue and accelerate, and we're going to run at that full speed.
And look, especially in the U.S. market, we were, for lots of reasons, misaligned with our clients. We had built products, both Foundry and the ontology, branching, and lots of ideas of how to manage large-scale data sets and then algorithms and classified setting. But in reality, there was a resistance to how we believed an enterprise should work. And if you look at what Shyam is saying and what Ryan is saying, what you're really seeing is American industry now has done 5-6 iterations, often with thin technologies, with thick sales forces that kind of have been supported by the venture capital community, and quite frankly by analysts looking for models they understood. We built a company that no one understood. We went deep on technology, that's Foundry. We went deep on the logical extension of that, which is all these precursor technologies that we've now begun building into AIP. And that we went deep against the playbook. And in fact, the playbook now does not exist. The playbook that is being built looks exactly like the products that are a reflection of our culture. And that's just an insurmountable advantage. And we are very focused on taking advantage of it.
Thanks, Ryan and Alex. Our next question is from Emo, who asks, how are you balancing investments for long-term growth while also delivering the profit and performance needed to keep shareholders confident and invested?
I'll take that
Because
one.
we are.
Yeah, we are. Thanks, Emo. And I think one example of this is we delivered on GAAP profitability 2 years before, before people thought it was coming. And then if you look to the last 3 quarters, we had 3 consecutive quarters of GAAP profitability. We've now guided to Q3 and Q4 of GAAP profitability. We're here with $3.1 billion on the balance sheet, and we're doing this all while we're investing heavily in AIP. And we're really doing that across the company, both with money, both with resources, and we're very focused on it.
Well, I mean, we delivered profitability years ahead of time. Why do we care about profitability? We care about profitability because we power some of the most important enterprises in the world. They care that we're on steady footing. We care about it because it shows people that we are serious. We care about it because it positions us to be on indexes like the S&P that show that we are one of the leading industries in the world. We believe in ourselves, which is why we've authorized a buyback to align with this belief in ourselves. Our belief in profitability aligns with our desire to be on the S&P. We are going to invest in ourselves not at a small scale, in the $1 billion range. And so profitability, stability, move to S&P, move to a company that reflects what we will be, which we believe is the most important enterprise software company in the world. And these are all very much linked.
Thank you both. Our next question is from Jesse, who asks, I know you guys are pushing for 5% of defense spending to go to software. How has this been received by policymakers in the defense community?
We spend a lot of time talking to various parts of the U.S. and allied defense communities, and there's, quite frankly, varied views on this. Our view is software that's actually used for important purposes, both commercial and non-commercial, has certain attributes. It's most likely built in America. It's most like it is built in the product of the context of a product, and it's been sold commercially. It is imperative for our country to move to a rebuttable presumption that the institutions that defend us buy a certain portion of software that is a product, more likely than not built in America, and that somebody has actually bought it besides some large program. And it's surprising how many people agree with this. We're a long way off from getting this done, but as our adversaries become more aggressive, as people come to terms with the fact that many of the things they may have learned in college that we're going to all regress to a state of loving one another are not coming to pass, and in fact our adversaries view that as a laughable fairy tale that we believe in at our own expense, people are getting more serious. When people get more serious, they stop wanting fantasies about how you build software, fantasies about how you implement it, fantasies about you're going to hire 10,000 people and give it to a company that's never built a product that's ever worked. But is that happening fast enough? No. Luckily for us, and hopefully for our country and the West, people are getting much more serious just because of events that you see happening around us. If you have any additions.
Oh, well said.
Okay. Thanks, Alex. Our next question is from Josmar, who asks, what's the latest on potential S&P 500 inclusion?
The latest is we expect to be eligible after we report Q3. And so we're proud to say we're less than a quarter away.
From eligibility.
From eligibility.
Thanks, Dave. Our next question is from Sony, who asks, can you elaborate on current capital allocation priorities?
Absolutely. So, Sony, we've delivered 3 consecutive quarters of GAAP profitability. Looking at the first half of the year, $285 million in adjusted free cash flow, close to almost $1 billion since we've gone public. AIP is going to be transformative. You've heard Alex talk about the scale that we think it could be. We've talked about reorienting the company around it. Earlier, I spoke about how we're reorienting our compensation about it. You combine that, GAAP profitability, strong cash flow, AIP, the board just authorized a $1 billion stock buyback, which aligns with our goal of S&P 500 inclusion.
We are very focused on investing in ourselves. We are not as focused on acquiring other companies. We believe we have the right products and/or we will build them. So we are investing in what we do, what we believe are the best in the world. Very little interest in products we see on the market. And so it's really an investment in ourselves, in our talent through changing the compensation, and our ability to retain people by making sure we're focused on a mission that is crazy important to us and the world, in showing our belief with actual real attendees and running like hell.